So HPA weekly, 17th January. Last time this week there was no money. We essentially had broken below the base, which turns out to be a distribution base, and and so what's happened right now? Right now is also no money, sort of hard money. Why I say hard? Because there was a counter trend bounce, which was mostly an oversold bounce, right? Things were so much oversold that there was bound to be a counter trend. So therefore there was some money for like short term traders in general, but the currently the market is still on no money. And in one word, one line, my bias is still that we will make a lower high in the near term future. uh, Key indices are on a downtrend, most of them, and they are also below all key MAs. Nifty 50 has not even met the 10 DMA, which is itself are trending down. We had an oversold bounce this week, but that bounce was too weak, and today's action is interesting because today's candle could turn out to be a higher low, or it could also. I mean, it's very interesting. So. But whatever the case may be, current till now that oversold bounce is also weak. Okay, so that's where the indices are. Breath, last time this week we were on a downtrend and we were very oversold. This week we have an oversold bounce, but breath is far from bullish, far from where you are uh, easily opening your account to risk. So similarly, momentum also has not picked up. We are still in oversold territory, and I will show all the plots very soon. Sectors, currently it's not applicable because uh, so it's not applicable right now. The anticipation is again, in my opinion, neutral to negative until things change for whatever I see right now. Okay, I'll get to this later, but let's quickly look at some charts. Uh, Hold on. So, uh, okay. Before even that, let's look at the indices. What I mean. So, we were very oversold on this day, like hugely oversold, and this bounce sort of to the MAs was expected, which came. And the good thing is, on a weekly time frame, the candles look really good. Okay, so if you see the mid small cap index, this was sort of the breakdown, and after the breakdown we've had some recovery, which again, like I said, it's a oversold bounce, counter trend bounce. We are clearly below the 10, 50 and 200 days. So on a long term, we are on a downtrend, but things are not very plain. We as chart people who do charts, we tend to draw lines like horizontally, black and white, but price action is not often so much uh, black and white. So this on a weekly action, it still looks not so bad. A lot of indices do have this huge demand candle. Okay, so that's a good thing, but we have to wait and watch. Is the thing. So on a daily, you will see that the moving averages are sloping downwards, and price is still not even clipped the 10 DMA. Now, why I say it's interesting is we can sort of have both the breadth as well as the indices. Not this one. Let's look at the mid small. Again, they are all very similar. Uh, I mean, the bottoming action around early part of November also looks sort of similar. Okay, but we need to have that confirmation, which came on 25, and this candle and today sort of looks very similar to me. But we'll have to wait and watch. We are nowhere near bullish. Okay, so now let's look at the breadth data. Net 4%. after this 13 January where we went to extremely oversold level, we had an oversold bounce. So 14th was a huge day. Uh, uh, Net 4% plot of 20 is a really good number, and 16 yesterday was also very nice. So a good bounce, then very sort of a sideways days, good bounce, and then today was also sort of a sideways days. So yeah, so if you look at the trend, uh, we so in general, when the percent 10 DMA stocks goes above 50, is generally the time where easy money comes. Okay, and that happened on 26, 25, 26. We are still not there yet. uh, Having said that, okay, breadth is improving, but in a very decent, very slow pace, right? So things are moving above the oversold zone. Even in medium term, things are moving above the oversold zone, and and things can get better, but abhi tak it is not, right? Momentum plots are still below zero or below 20, which is the oversold level, both in Landry as well as M swing. So again, for you to be like, okay, like, you can, for us to make money for 2 3 4 days in a row, as in a swing trade, these things have to start plotting, start moving higher than this level, and trending up. You see on the histogram as well, M swing is, Landry is flat. This we need this area to be able to be 100% invested and make money. Currently it's not there. uh, the thing is, then the next question is, hey, so if this level, if this time is going to come, say, isn't this time the best time to open positions? That is the question, right? Uh, so that has always been the debate, like, how sure are you that uh, the 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 rally is going to come, right? So that's where many people feel comfortable in waiting for the confirmation, and not and foregoing 1 or 2 day of move for that confirmation. So especially people who cannot uh, rely on themselves to use stop losses, take a loss, for them it's even more important for us to wait for confirmation of the momentum coming. Same thing is also, the other momentum plot is also showing a very, like, it's almost dead currently. Okay, so that has been the case for now. Okay, I actually don't have much to tell, other than the fact that we are we are in a bona fide sort of downtrend, and this could get worse. Okay, so what happens is, you guys know, whenever we are on an uptrend, the price action behaves like this. The moving averages are actually supporting. We overextend from the moving averages, come back, use the moving averages as springboard supports, go up, come back, use them as supports. We will have undercuts, but those undercuts will be quickly bought. Currently the things have started to fade, and again, like I said, this could be a base, this could be a base shakeout, and then we again start trending back up. But we need confirmation. At least I don't know any other way to confirm using macro or other factors which many people use, but for me, I don't know yet, so I have to wait for confirmation. And the thing is, if the downtrend starts and picks, then the the regime will reverse, and it will look like we will trend down, come back, get slapped with the MAs, come trend down, get slapped by the MAs. Okay, so we don't know which one it is. Again, I'm stressing on this fact very much. Things are not black and white. Okay, we don't know if this regime will, this nascent downtrend which has started will continue, or this will turn out to be a shakeout, a more more people, money will come back, buy, and again push us above the key moving averages. Okay, so I am not sure yet. That's where we are right now. All right. So as now that I made that point clear, let's move on to other things. So I'll quickly discuss my positions and trade plan. So the positional portfolio is sort of uh, I I was up around 8%, and then that 8% fizzled out. So currently I am almost 0 0, almost break even sort of place. I'm still I this week I again build up my position. Got some new names, and Shakti Pump I'm still holding. I'm very much looking that this guy will find support, and yeah. So currently that's just hope. Zen Technologies I averaged up here on this day. So this was my buying day. Went up, gave up the gave up the gains, and then I doubled the position here. So Zentech has now 20% of the account. Anantraj is okay. Gravita is around break even. I think I entered somewhere here. um, Astra Micro is still in. I believe, I mean, I hope this would be sort of a base, like it has bounced from the previous lows, very same place. So this looks to be some sort of a support. But again, this could turn out to be a breakdown. So the moment if it goes below this, I will have to sell. This is a new position I built on this day, and I because this is a positional PF, I would like to uh, some experiment, not experiment, but diversifying the entry techniques, which I did not use before. In a bull market, I mostly tried breakouts, and more recently I have been using PBCs, but in the positional portfolio I also would like to try some different entry systems. So Carnex was bought on this day, and this was a 50 DMA 50 DMA bounce, as well as this was a very good shakeout. So this is a new position. Another one I bought yesterday was EPAC. Again, you can see why this is at a previous breakout level, which is, I mean, these are confluences. One could also say that this is also, I think, at a sort of a key moving average level. Uh, so my sell would be if this breaks down below, and slowly I am more inclined to get into fast movers. Uh, so so i'm i'm also, this is also part of me actively trying to uh, what's the word, de-bias myself against the 5% circuit movers. So that's why I'm also more gravitated towards names which might go into circuit or are already in circuit. So current KR and heat exchange I got in today. This was a nice little breakout from this inside bar, and also at around key moving averages. All the moving averages collide. Also a very new stock. So that's the other reason. I bought GMR Pui Pui on the open today. This is a slightly different kind of a buy. I believe that we have, so there are three. So generally uh, three phases of a base building. One is the downtrending phase, which is, in my opinion, over, because we had a base, the middle phase of the base, and now we have a clear higher low, and and I believe this can be a level where I can manage my risk. So if it slides below this, then I will be out. You know, so that was the reason why I bought this. And I'm also trying to buy. I mean, one major thing which I definitely want to do you at least while trading in the positional portfolio is to always have a theme correct. So GMR Pui is also from a theme which is hot, which was hot, and apparently also a multi-year theme, and that's why a lot of these names you will see that they are also from some themes, and this one is from the smart meter theme. So that's the reason. Yeah, so these are the names I'm currently holding. The swing portfolio is uh, changing very fast. I am I am doing extremely, uh, uh, I should say, extremely risky, but also extremely fast and kind of a trade. So Apollo was the one where I again built back, I think on 13th or 14th, and these would be more evident mostly in 25 minutes time frame. So yeah, somewhere here around, and this was purely again a anticipation kind of a buy, where Apollo Microsystems is clearly a very strong stock. If you see from the daily time frame, it had a huge buying here, and this is not, definitely not distribution. This is the opposite of distribution, and it came back and bounced off from the key moving averages here. That was also a place where one would, this is previous high, so around that level, and that was the key reason I bought this. uh, in between, yes, till this morning I was holding Newgen. Yeah, so this was a good trade. I Yeah, like I said, I'm my swing trading is mostly very uh, focused, highly concentrated, and with tight risk management. So yeah, I so yeah, I I got I got out here today at my buy price, around 25% of whatever I had bought, and that freed capital I again used to get into Sia Silk and Bajaj Healthcare this morning, and I'm using extremely smaller time frame. So Sia Silk today was a buy on this candle, when this little consolidation broke out. That was also visible on the daily. So this looks like a double bottom base to me, albeit is a small double bottom. Many Pakka O'Neill people might not call it a double bottom because of the days and weeks and whatever not. But again, this was again, I will say this was a not FOMO buy, but definitely a buy which I would not generally have taken during this market conditions. The market conditions right now, if one is trading, the peak time to buy would be either on this day or this day, and somehow I mean it could still work, but this is still a risky trade today. I did not follow through, but I decided to hold on, almost like I was very very near to saying that okay, fuck it, like I will not carry this, but somehow I carried it, and like I said, I bought when it was going above this pivot, and I'm currently this is slightly below my buy price. The other one was was a hugely profitable trade. Bajaj Healthcare was a gap up, was a strong start early morning, and because this was also in my red list, and I had every morning 9:07 I see my red list, and whichever names are uh, whichever names are already on the up, I try to sort of focus on that. So but I could not get into Bajaj Healthcare right on the open because I was busy with GMR Pui Pui. But this was a stock which could have been bought on the open or on the next candle itself. But I traded this flag. Uh, I traded that flag because also the View app was supporting. uh, yeah, so this is, I'm carrying, this is about 30% of the portfolio right now, and I have a stop below this. So this is risk free right now, and part of that that would be used to take care of if anything horrible happens on Sia Silk. My Sia Silk uh, stops is below this entry, this one. I think I have staggered stop one right below this level, and the 50% right here. So those are my trades. I'm trading still here and there, but I'm the the adjustments I have made is I'm actually trading less, both frequency. I mean, capital is a different thing for me, but in general, currently the time is such that at least from the kind of trading which I do, right now is not a good time to trade. The focus should be on capital preservation more, uh, and we should trade less, both in terms of frequency as well as capital. Definitely for those traders who do not put stop loss, okay, definitely trade less, both in terms of frequency and capital. And to my to my surprise, there are a lot of people who still are traders but don't use stop loss, and that is something which I cannot understand. Uh, but 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 that's how it is. So if you are one of them, then please do this, because if you cannot take a loss, and if a position in a loss, you're very it's very difficult for you to get rid of it, then it's very difficult. It's a very slippery slope. The other thing then becomes is, if you're still trading, then you have to adjust your style and speed, okay, both. It's very essential. uh, how come style? See, breakouts are not working. So if you are still trading like the style which was working 6 to 8 months back, uh, then that would be difficult again. So breakouts are not working. You have to move to PVAs or PBCs, uh, go to smaller time frames and hunt for tighter, not exactly tighter, but at least pivots which will give you smaller place to put your stop loss, and again, this adjusting your style speed also takes time. We get comfortable with the levels which we are already used to. 10-15% में de-risk करेंगे. So it's difficult to adjust. I get it. It takes time, and also know this, that it takes time. The other thing I want to point out is that uh, as traders, you can still find stocks which will give you moves. You'll still find relatively stronger names, right? You'll still find relative strength names, and where to find them is the top relative strength, top 10, not top 10, top 100, top 200 list. I believe if anything moves, if anything will give you momentum related moves, they will automatically come and feature in that list, right? So you don't have to spend much time doing the scanning and finding innovative ways to scan for market movers. You can scan the volume shockers, you can scan the relative strength list, and those two lists are enough. So this is the time when your risk management will truly be tested if you are still trading. Okay, risk management, how good risk manager you are will your risk management skill will come to the fore, and also other skills also. uh, so if you had a watch list of, in general, 10 stocks in a healthy market, 5 or 6 of them would move, and so at that time the thing would be, acha matlab, the ones, how can I be in the stocks that move the most, rather than how can I be in the stocks which move. But currently the question the will be, uh, will go to, like, out of the 10 stocks which I have, how can I position myself in the one which actually moves. Getting a move itself will be a difficult task right now, given the given the market environment. So your risk management and other skills will be tested right now, and I believe this is actually an opportunity for you to get better in that. So in bull market, nobody becomes a great trader, trust me. The only thing a bull market uh, uh, actually maybe not, yeah, so bull markets are good if you want to hold something for a long term, and if you can actually hold your winner throughout the bull market, then you actually learn the how important is actually holding. And in my opinion, as a trader, holding your uh, winners is the most difficult job. I suck at it. I am pathetic, but I am going to change that. Yeah. So the last thing I want to say is manage FOMO. Okay. Uh, and personally speaking, 2 years ago, I was at a place where I thought I would never be able to manage FOMO. I would never be able to uh, be emotional, not emotionless, but I would never be able to be okay and not, like, what FOMO is. If I see XYZ stocks here and there, right? So, but I'm happy to tell you that I'm at a place right now where I don't think FOMO is a problem with me, and that's why it's manageable. First thing, and so manage FOMO. Markets will not run without you. Okay, uh, markets will not run without you, without the breadth improving, without the moving averages curling up and starting to trend up. So believe in this fact, and don't trade if trading, over trading is a problem, right? So these are few things I wanted to say. A very short session today. I will take questions. Apart from that, I don't have much to add. uh, yeah. uh, Emphasize that it's capital preservation should be the key right now. And in the same breath, I also want to say that there are other ways of buying and selling. There are people who can spot oversold markets and see a little long term. I am not like that. I will take the near term and this one approach. And so currently the near term market is breadth is not great. So capital preservation, trade less, both in terms of frequency and capital. You have to adjust, and that takes time. You can still find movers. Risk management will be very important, and you should use this time of the market to actually get better in that. I clearly remember 2022 was the time my risk management changed. That was a treacherous market. I was beaten black and blue, but my risk management got really well. I mean, not really, but So that, and lastly, manage FOMO. Markets will not run without you. That much is for certain. And whenever the rosy time will come, your uh, breath tools as well as the simple moving averages will let you know. I will let you know. I will tell 5 times a day that things are getting better, but not now. Okay, so I'll stop right here. Thanks for joining, and have a good weekend.